Welcome to this explainer. Look, if you've been watching the Central and Eastern European startup ecosystem at all lately, you know things move ridiculously fast. I mean, startups pivot, deals close, and most of the truly interesting developments are completely gone from your feed before you even notice them. But right now, the CEE ecosystem is rapidly maturing and aggressively breaking outdated stereotypes. So today, we're actually going to slow down a bit to look at the patterns that truly matter. We're going to see exactly how founders and funds across the region are taking the old playbook, ripping it up, and writing an entirely new one.
Now, you might be wondering, is the CE ecosystem finally done complaining? Because for years, there's been this persistent narrative, honestly almost a straw man at this point, that the region moves too fast but completely lacks serious structural support. The complaint was always the exact same. We don't have the funding, we don't have the leverage, and we don't have the track record to compete on our own terms. Well, looking at the data from June 2026, it is abundantly clear that the game has completely changed. The ecosystem isn't just complaining anymore, it is building.
Section 1. Building the plumbing. Funding beyond the capital. Okay, let's dive into this by tackling one of the biggest myths in the entire region. The idea that there is absolutely no serious funding outside of capital cities. The old assumption was, if you weren't in Bucharest, Warsaw, or Prague, you were basically locked out. But Romania just executed a massive countermove that completely shatters this. Take a look at Credo Ventures, formerly Fortech Adventures. They just dropped a €34 million fund on the CEE market. But here's the kicker. They didn't do it from Bucharest. They launched this out of Cluj, a second city, and they built this massive fund by anchoring it with a €23.5 million institutional commitment from a public entity, the Northwest Regional Development Agency. Then, they successfully topped up that public anchor with private capital and management funds.
And their strategy? It's incredibly systematic. First off, they're using a separate €1.7 million grant facility specifically designed just to validate early ideas before they're even fundable. Then, their plan is to back 46 growth stage startups over the next 4 years across hardcore sectors like health, manufacturing, and defense. Guys, this is exactly what we mean when we talk about foundational infrastructure. Romania actually built the exact plumbing the region kept complaining it lacked, and they did it by leveraging public money to unlock private capital right out of a second city. It's a real game changer.
Section 2. Taking leverage. Deep tech on the founder's terms.
So there's always been this common complaint that deep tech founders, just because their tech is so complex and capital intensive, usually have to beg for money early on, right? They end up diluting their ownership just to survive. But Poland's Sibylla Technologies is actively busting that myth wide open. First, let's define exactly what they do. They operate in space situational awareness. In practical terms, that means they track objects in orbit using a massive global network of optical sensors. This is about as dual-use and unhyped as serious deep tech gets. There are absolutely no flashy consumer apps here. It is pure, hardcore infrastructure for space. And incredibly, they built this entire global network completely self-funded from day one. No way, right? But it's true. And this brilliantly illustrates their discipline. After years of bootstrapping, they finally took outside capital, an €8 million round. This was their very first external round, led by TCE Fund IV and Vinci's Venture Fund. They deliberately waited to take the money until they had an undeniable, working global network. So the crucial point is right here. When that €8 million check finally came in, the founders and existing shareholders kept a majority stake. By building the entire sensor network before taking a single euro from anyone, they literally forced investors to play by their rules. They kept the leverage firmly on their side of the table, took the capital on their own terms, and still own their company. It is an absolute masterclass in founder leverage.
Section 3. Shipping real proof. Graduation to industrial AI.
Now we're seeing how CEE founders are graduating from pure hype to hardcore multinational traction. Take Almatra. Founded by Romanian entrepreneurs and deliberately headquartered in Berlin, they are proving that CEE talent can command serious global rounds. Just look at this customer list. Bosch e-bike systems, ABB, Siemens Energy, Viessmann, Grundfos, these are massive, incredibly demanding corporate giants. What Almatra does is install AI cameras directly above production lines. These cameras turn raw footage into live operational data, tracking cycle times, machine utilization, stoppages, and they do it entirely without touching the factory's existing IT infrastructure. They are shipping real industrial AI onto real factory floors.
Now, what's really interesting about this is the hard proof. Bosch's e-bike systems didn't just deploy the tech, they reported a massive 19% output increase after using it. ABB saw a 15% jump. Look, when you have indisputable numbers like that, raising capital becomes a totally different game. This real-world proof is exactly why Almetra just closed a €16.3 million Series A led by Blishay, the exact same fund that backs Spotify and Pinterest. The data just speaks for itself.
Section 4. Reversing the flow. The defense tech shift.
Okay, we absolutely need to talk about a massive geopolitical power shift happening right in the region. Just a year ago, Western VCs were literally stamping red flag on anything related to defense tech. It was considered virtually unfundable. But now, that dynamic has totally reversed, and the flow of knowledge has completely flipped. We're seeing the launch of Brave France this quarter. This is a joint defense tech startup program between Ukraine and France, built directly on the model of Ukraine's Brave One platform. The old way of the world was Western Europe exporting defense technology eastward. The new way? A major Western European state wants Kyiv's playbook badly enough to actually co-fund a program around it.
The exchange here is fascinating. Ukraine gets access to advanced French technology, sure, but what does France get? France gets something money usually cannot buy. They get real experience from the only country running high-tech warfare in real conditions right now. The combat-tested experience is the ultimate asset today, and that asset sits squarely in Central and Eastern Europe. CEE is now teaching the West.
Section 5. The track record. Putting overlooked cities on the map.
From defense tech, let's pivot to geography and track records. We're shifting our focus to Belgrade, Serbia. Now, Belgrade is a city that almost never makes the cut in these major tech ecosystem recaps, but repeat founders are completely changing the geographical game, proving that talent and track record transcend borders. Enter Superplane, based right out of Belgrade. They're building an open-source control plane with over 400 integrations. It essentially allows AI agents and human engineers to run production infrastructure together without breaking things. And they just secured a €2.28 million pre-seed round led by Credo Ventures and First Momentum Ventures. But why did top-tier funds flock all the way to Belgrade for a pre-seed?
Well, let's see how this builds. The founders, Darko Fabian and Marko Anastasov, are definitely not beginners. They previously built Semaphore, a developer infrastructure company relied upon by heavyweights like Confluent, Replit, and Superhuman. So they leveraged that serious, undeniable previous track record to unlock capital in an otherwise overlooked geography. The track record was the key, and it firmly put their city on the investment map.
And finally, the call to action. Stop waiting for permission. When we step back and look at these stories together, we see a complete paradigm shift. We have a €34 million fund operating out of a second city anchored by public money. We have a bootstrapped Polish space startup that forced investors to wait until the leverage was entirely theirs. We have Romanian founders proving massive industrial ROI to secure global capital. Ukraine exporting defense innovation to France, and repeat founders in Serbia pulling top-tier venture capital into a city that usually gets ignored. Every single one of these moves represents something the broader region has claimed it wanted for years. And the truth is, the pioneers in this ecosystem aren't complaining about systemic gaps anymore. They're just building the solutions themselves. As this briefing so perfectly puts it, the neighbors stopped waiting for permission. The old playbook is dead. So the question you have to ask yourself now is, are you going to keep waiting for the perfect conditions, or are you going to start building your own leverage today?